All right, let's talk about something that quietly messes with our biggest decisions, especially when it comes to our money. It's this fascinating thing called the authority illusion. And I'm telling you, by the end of this, you might just look at your whole investment strategy completely differently. So let me ask you something, and be honest. How far would you actually go to obey an order from an expert? I mean, picture this. Someone in a lab coat or a top analyst on TV tells you to do something that feels, well, a little off. Do you do it? How far are you willing to go? You know, the answer to that question is probably a lot further than you think. And to really get why, we've got to go back, way back to the 1960s, to a psychology lab at Yale. This is where a researcher named Stanley Milgram ran one of the most, well, frankly, one of the most disturbing experiments of all time. So here's how it worked. They brought in regular people, folks just like us, who thought they were part of a simple learning study. Their job was to be the teacher and give electric shocks to a learner in the other room every single time they answered a question wrong. And here's the thing. With every wrong answer, the voltage cranked up. The learner, who by the way was just an actor, started yelling, then screaming. He'd complain about a heart problem, he'd beg them to stop, and then at the highest voltage, just silence. Okay, so you can imagine, the volunteers were freaking out. They wanted to stop, but every time they paused, this authority figure, a guy in a crisp white lab coat, would just calmly say, "The experiment requires you to continue." That's it. No threats, no yelling, just that simple, firm command. So what happened? The results are, honestly, they're chilling. A whopping 65% of people, 65, they kept going, all the way to the final 450-volt shock, a switch that was literally marked danger, severe shock. They did this thinking they might have actually killed the guy in the other room, just because the man in the coat told them to. And that right there, that's what we call authority bias. It's this powerful, almost unconscious instinct we have to just trust and obey people who look like they're in charge. It's like their title, their uniform, or even just their confidence can flip a switch in our brain and turn our own critical thinking right off. Now, believe it or not, this bias wasn't always a bad thing. In fact, for most of human history, it was a survival tool. I mean, listening to the tribal chief about which berries will kill you? Yeah, that's a pretty good idea. But today, in the world of finance, that exact same instinct can be a total misfire, leading you right into a financial disaster. All right, so let's bring this into our world. How does this ancient instinct show up in your portfolio? Where are we investing on blind faith? Well, today's white lab coats look a little different. Think about it. It's that star fund manager on TV, looking super confident. It's the glossy, professional-looking report from a huge brokerage. Or maybe it's that charismatic CEO on a magazine cover making these huge promises. Even a simple buy recommendation from a big bank. These are the authority figures we're dealing with now. And this isn't just theory. It has a massive real-world cost. Just look at the lead-up to the 2008 crash. You had all these respected experts predicting insane returns for certain stocks, like 200, 300% upside. So what did everyone do? They trusted them and poured their money in. But when the market crashed, those very same stocks lost 70, 80, even 90% of their value. The warning signs were there, but people were blinded by their trust in the experts. And this happens over and over again. So why? Why do we keep falling for it, especially when it's our own hard-earned money at stake? Well, for one, it just feels safer. And honestly, it's easier. Doing your own homework, really digging into a company, that's hard work. It's much simpler to just take a mental shortcut and trust an expert. Plus, there's a little ego protection going on. If you lose money, you can just say, hey, even the pros got it wrong, right? But look, it's not all doom and gloom. We're not helpless here. We can absolutely build a smarter defense against this. And the goal isn't to just reject everyone and trust no one. It's about learning how to question authority wisely. Yeah, because rejecting all experts, that's just as bad as blindly following them. Can you imagine trying to figure all this stuff out from scratch? No way. The real skill is learning how to tell the difference, how to spot the experts who have actually earned the right to be trusted. So here's a super practical 3-step test you can use. First, question their incentives. Ask yourself, how does this person make money? Are their interests aligned with mine? Second, ask for the other side. A real expert will always talk about the risks and admit what they don't know. And third, separate their competence from their competence. Is there real substance there, or are they just a great salesperson? The great investor Charlie Munger had the perfect quote for this. He said, "I never allow myself to have an opinion on anything that I don't know the opponent side's argument better than they do." Wow. I mean, that's the ultimate test, right? Does this expert want you to think for yourself, or do they just want you to follow orders? Because at the end of the day, here's the bottom line. The market doesn't care who you followed. It doesn't care if it was a famous guru or a big bank. The only thing that matters is whether your own reasoning actually held up. So I'll leave you with this question to chew on. Whose authority have you accepted without a single question? Think about it. Is there an expert, a website, a CEO whose word you take as gospel? Maybe, just maybe, it's time to start asking a few more questions.